In prior interviews, I've told you that I didn't own gold because I thought it might go through 3,000. I owned it because I was afraid it would go through 9 or 10,000. Very different motivations. Gold traditionally does well when people are concerned about the maintenance of their purchasing power in other savings and investment products denominated in fiat currencies. The reason that I think that gold is starting to work is because people are starting to pay attention to the math. First of all, the U.S. 10-year Treasury is paying just over 4% in a currency that I would suggest is experiencing deterioration of its purchasing power, more like 7.5% or 8%, which means that by receiving 4.2%, you are really losing 3.5% or 4%. There's nothing that would make people more concerned about the deterioration of their purchasing power than experiencing it. If you give the U.S. government your money for 10 years, they solemnly swear that they will make you 3.5% poorer every year for 10 years. The first government promise of my life that I believe that they will keep. What's the math behind that? Well, that's pretty simple. The on-balance sheet liabilities of the U.S. government exceed $36 trillion. According to the Congressional Budget Office, the net present value of unfunded federal promises, little things like Social Security, Medicare, Medicaid, federal government pensions, military pensions. According to the Congressional Budget Office, that number is $100 trillion. To put that in perspective, the gross federal budget before they spend a dime, gross federal income, pardon me, is $5 trillion. So we owe $130 trillion, and we propose to service that with a budget where our income is $5 trillion? What on earth is Congress smoking? The only way out of this circumstance that's politically feasible is to honor the nominal value of our federal promises while inflating away the net present value of those promises. It is, Andy, the only way I can think of. We've done this before. In the decade of the 70s, I was there. We reduced the purchasing power of the U.S. dollar, according to the Office of Management and Budget, by 75% over 10 years. Not coincidentally, the gold price went up 30-fold. I'm not suggesting, and I don't want to see any clickbait headlines from the people who rip off your content. I'm not suggesting that the gold price will go up 30-fold. I am suggesting that if the purchasing power of the U.S. dollar declines by 75%, which I believe it will, that the nominal price of gold will keep pace. And that isn't the $3,000 number. It's a much higher number.
Great answer. I'm laughing not at you. I just kind of said that better, and thank you. So thank you for that. Well, obviously then I will say this, it leads me to say that this is going to be a raging bull and is a raging bull in precious metals. And that shows the resiliency really that you're seeing here recently. Is that what you would, I don't want to put words in your mouth. Is that what you would say then, just these recent?
The age-old test is that an ounce of gold, 30 grams of gold, buys you a very, very, very nice men's suit. That's true today. And it'll be true 10 years from now. $3,000 US will not 10 years from now buy you a fine men's suit. Right? Ripping bull market. How about maintaining your purchasing power? It may be that gold outpaces the deterioration of the U.S. dollar. It's done that before. It did it in the period 1970 to 1981. It did it again in the period 2000 to 2010, which is to say, in 2000 to 2010, the gold price was up sevenfold. But my suspicion is it will feel like a ripping bull market because the deterioration of the purchasing power of the U.S. dollar will prop the nominal price of gold. Or, but more simply, I feel much better owning it than not.
That's probably the best answer you could give right there. Well, let's do this. I'd love to talk about stocks next. And before we do this, I want to give, really, when I first had you on, it's been about 2 years ago, and you told me you invited me to your conference. Uh, these companies I'm going to ask you about, all of them, I want to say all of them were at your conference last year. Since that conference, I've become an investor in a few of them. And I've been very, very happy. Now, granted, you are not a trader. You don't take a 3-month position. Correct me if I'm wrong, or a 9-month position or a year position. You take a position because you really like the company for a plethora of reasons. But I wanted to give a shout out to all that. I've been very, very happy in the past year, and it's been more than worth my time going to the conference. But tell me about the conference first, what you got going on in July.
Well, first of all, it's the nicest possible thing you could say. We've been putting on a conference for almost 30 years because we enjoy the process of helping people become better natural resource investors, period, full stop. And your satisfaction is the nicest possible thing that a conference promoter could hear. A word about the companies. Unlike any other investment conference that I know of in the world, the qualification to be an exhibitor at our conference is that your stock has to be owned by the conference sponsors, including myself. There's no guarantee, Andy, unfortunately, that because I own a stock, it goes up. I certainly have made mistakes in the past, and I will certainly make them in the future. But the process is honest. At every other investment conference, I know the qualification to be an exhibitor is a check that cashes. Not a very tough test, although some exhibitors fail. The other thing that's, I think, unique about our conference is we have an absolute gold-plated money-back guarantee. If you attend our conference, either in person, which is what I would prefer, or in the comfort and convenience of your own home via live stream, and you don't think that we have delivered the value that we have charged you for, we will, no questions asked, give you a 100% refund. That's been our policy for 30 years. I'm delighted to say we've had to refund less than 1/10 of 1% of the tuition that we've charged. But the truth is the financial risk is all mine. If you come to the conference, either live or via live stream, and you feel for any reason that we didn't give you your money's worth, we'll give you your money back. Nobody else I know of has that guarantee.
Excellent. And I will put a link to all those that want to attend the conference. I'll put that in the show notes below. One of the, speaking of the conference, one of the CEOs at the time, and now he's the chairman that I met there, was LUCA Mining, Javier at LUCA Mining. Very impressed with him. I had him on the show. We talked about him about 9 months ago. After we talked about them, I did not buy him before we talked about him. I bought on some weakness, as just what I do. And I've been very, very happy. Tell me about your thoughts on LUCA Mining. And I don't want to put words in your mouth. So yeah, what are your thoughts on LUCA Mining?
Well, I am a shareholder of LUCA Mining, and I similarly am impressed by Javier, the chairman, who is also, of course, the largest shareholder. I own it because I like Mexico, and Mexico's decidedly out of favor. The political process in Mexico is challenging for mining. There's a straight up Pinko as president, and the sociology is challenging too. You have to be able to deal with extraordinary poverty, and you have to be able to deal with the narcotraficantes. Mexico is not an easy place for a gringo to operate, which means ideally, if you're investing in Mexico, you would invest behind a Mexican. And LUCA is run for and by Mexicans, hardcore mining investors who I've known a very long time. They have bought 2 mines that arguably were starved for capital and mismanaged in the past, added capital to them. And their first challenge is to make those mines completely turned around. They are now generating cash as opposed to losing cash. That's good. But they need to show the market that they can buy mines that were mismanaged by gringos, that were starved for capital, turn them around, and generate cash from them. Their second challenge will be then to use that cash flow to explore the on-concession exploration potential, which in the case of both of these projects, I think is very large. Because these projects were both milked for cash by their prior owners, very little on-concession exploration was done. And so after LUCA changes the operations around, they have to grow the operations through exploration. The third challenge they have is to rinse, wash, and repeat. You need to make companies in the mining business bigger. You need more scale. More scale gives you more trading liquidity, which gives you a lower cost of capital in a capital intensive business. There were probably 30 or 40 mines in Mexico owned by Canadian or American or Australian issuers that have been starved for capital and are operated by people who, in many cases, don't even speak Spanish. The idea that you would operate a Mexican mine in Spanish from Mexico, as opposed to operating that mine from New York City or Toronto or Sydney, makes absolute sense to me. And that's the thesis around LUCA. Will it work? I think so. I hope so. I don't know so. To reiterate what they need to do, an operational turnaround at their two existing mines, the initiation of intelligent on concession exploration, and then the amalgamation of more assets into the whole that is LUCA. That's our challenge. If they cause that to occur, if, not when, if they cause that to occur, this is likely a 10-bagger.